Is debt cancellation considered taxable income by the IRS? In today's financial landscape, many individuals are asking a pressing question. Is debt cancellation considered taxable income by the Internal Revenue Service? With recent discussions around student loan forgiveness, this topic has gained significant attention. If you have had debt forgiven or are curious about how it affects your taxes, you are not alone. When a lender cancels or forgives a debt, the Internal Revenue Service usually treats that amount as income. This means you may need to report it on your tax return and potentially pay taxes on it. For example, if you owe $10,000 and the lender forgives for $1,000, the Internal Revenue Service may consider that for $1,000 as taxable income. However, there are exceptions to this general rule. One notable exception applies to certain types of student loan forgiveness. If your student loan is canceled due to your work in public service or for a nonprofit organization, the forgiven amount may not be taxable. This is part of the Public Service Loan Forgiveness Program, but not all forgiveness programs qualify for this exclusion. Another important exception is related to mortgage debt. If your mortgage debt is forgiven or reduced, you could exclude up to $2 million of forgiven debt from your taxable income. This applies only if the debt was used to buy, build, or improve your main home and is secured by that home. This exclusion comes from the Mortgage Forgiveness Debt Relief Act and applies in specific situations, such as mortgage restructuring or foreclosure. For other types of debt, like credit card or personal loans, canceled debt is generally taxable. However, if you were insolvent or in bankruptcy when the debt was canceled, you may qualify for an exception. It is always advisable to consult a tax professional or refer to Internal Revenue Service guidelines if you have questions about how canceled debt impacts your taxes. The rules can be complicated, and exceptions may apply based on your individual circumstances. If you are dealing with student loans, remember that not all forgiveness is treated the same by the Internal Revenue Service. Public service and specific forgiveness programs may offer tax-free relief, while other types could be taxable. The Internal Revenue Service provides forms and instructions for reporting canceled debt. For example, Form 1099-C is sent by lenders if they forgive $600 or more of your debt. If you qualify for an exclusion, you may also need to file Form 982. In summary, while most canceled debt is considered taxable income by the Internal Revenue Service, there are important exceptions for student loans and mortgage debt. Always stay updated with the latest Internal Revenue Service rules and consult a professional if you are uncertain.